Hey everyone, it's tax season again. That time of the year when we all scramble to gather our financial documents, receipts, and forms. It can be a bit overwhelming, right? But don't worry, we're here to help you navigate through it all. Don't worry, we're not going to bore you with the usual dull details. Instead, we're going to break it down in a way that's easy to understand and maybe even a little bit entertaining. We're here to make taxes fun. Well, as fun as taxes can be. Imagine confetti falling from the sky as you fill out your tax forms. Okay, maybe not that fun, but you get the idea. Think of us as your wacky tax guides, ready to break down the IRS's new tax brackets for 2025. We'll explain what they mean for you and how you can make the most of them. Why should you care? Well, these brackets determine how much of your hard-earned money goes to Uncle Sam. And let's be honest, we'd all like to keep as much of our money as possible. Knowing about them can help you plan your finances better. Whether you're saving for a big purchase, planning a vacation, or just trying to make ends meet, understanding your tax obligations is crucial. It's like knowing the rules of a game before you play. You'll have a better chance of winning. And in this game, winning means keeping more of your money in your pocket. So, buckle up and get ready for a wild ride through the world of taxes. We'll take you through the twists and turns, the ups and downs, and make sure you come out the other side with a smile on your face. We promise it won't be as painful as a root canal. In fact, by the end of this, you might even feel a sense of accomplishment. So grab your favorite snack, sit back, and let's dive into the wonderful world of taxes together. Imagine a giant staircase. Each step on this staircase represents a different tax bracket. Now, what exactly is a tax bracket? It's a range of income that is taxed at a particular rate. The more you earn, the higher you climb on this staircase and the more taxes you pay. But don't worry, it's not as daunting as it sounds. Each step represents a tax bracket. For example, the first step might be for income from $0 to $10,000, the next step from $10,001 to $20,000, and so on. As you earn more money, you climb higher up the staircase. But here's the interesting part. You only pay the higher tax rate on the money you earn within that specific step. As you earn more money, you climb higher up the staircase. For instance, if you earn $15,000, you pay the lower tax rate on the first $10,000 and a higher rate on the next $5,000. This way, your entire income isn't taxed at the highest rate, just the portion that falls within each bracket. The higher you climb, the more taxes you pay. But remember, it's only the income within each bracket that gets taxed at that bracket's rate. This system ensures that everyone pays their fair share based on their earnings. But here's the catch. You only pay the higher tax rate on the money you earn within that specific step. So, if you move up a step, only the income in that new bracket is taxed at the higher rate. This progressive system helps to balance the tax burden. Confusing? Don't worry, we'll explain it all. Think of it like this. If you buy a pizza with different toppings, you wouldn't pay the same price for each slice. Each slice has its own price based on the toppings it has. Think of it like this. If you buy a pizza with different toppings, you wouldn't pay the same price for each slice. Some slices might have more expensive toppings like pepperoni or extra cheese, while others might just have plain cheese. You pay for each slice based on what it has on it. The same goes for your income and taxes. Each bracket has its own price tag. So as you move up the income staircase, you pay different rates for different portions of your income. This way, the tax system remains fair and balanced, ensuring that everyone contributes according to their ability to pay. The IRS loves to keep us on our toes, so they've adjusted the tax brackets for 2025. Don't panic. We've got the inside scoop on these changes. Remember that staircase we talked about? Well, the steps have shifted a bit. This means the amount of money you earn before jumping to the next tax bracket has changed. We know, numbers can be boring, but trust us, understanding these changes can save you some serious cash, inflation, and your wallet. Remember that time you went to buy your favorite candy bar, only to find out it cost twice as much? That's inflation, my friend, and it affects everything, even taxes. The IRS knows that inflation eats away at your money, so they've adjusted the tax brackets to try and keep up. Think of it as a small win in the battle against rising prices. It's like playing a game where the rules keep changing. But hey, at least the IRS is trying to play fair. Kind of. The standard deduction, your tax-free friend. Here's a fun fact. Not all of your income gets taxed. The standard deduction is a certain amount of money you can subtract from your income before calculating your taxes. And guess what? It's going up in 2025. That means more money in your pocket and less for Uncle Sam. We like the sound of that. Think of it as a free pass from the tax man. It's like finding a $20 bill in your pocket. Always a good thing. Capital gains, selling stuff, and taxes. Ever sold something for a profit? Maybe you sold an old piece of furniture, a car, or even some stocks that you'd been holding onto for a while. Congratulations, you've entered the world of capital gains taxes. This is the tax you pay on the profit you make from selling an asset. It's like a little celebration for the government every time you make a profit. Don't worry, it's not as scary as it sounds. Basically, when you sell an asset like stocks or real estate for more than you paid for it, you have to pay taxes on the profit. This profit is known as a capital gain. The tax you pay depends on how long you've held the asset and your income level. The good news is that the thresholds for capital gains taxes have also been adjusted for 2025. This means that the amount of profit you can make before you have to start paying taxes on it has increased. So you might end up paying less in taxes than you think. For example, if you sold a house that you lived in for at least 2 years, you might be able to exclude up to $250,000 of the gain from your income if you're single, or $500,000 if you're married and filing jointly. That's all for now, folks. But remember, understanding how capital gains taxes work can save you a lot of money in the long run. We hope you enjoyed our whirlwind tour of the 2025 tax brackets. Taxes can feel like a roller coaster, but with the right knowledge, you can navigate them smoothly. Remember, knowledge is power when it comes to taxes. The more you know, the better prepared you'll be to handle your tax obligations and even find ways to save money. Stay tuned for more tax tips and tricks. We'll be diving into more topics to help you understand and manage your taxes better. Whether it's deductions, credits, or other tax-saving strategies, we've got you covered. So keep watching and stay informed.